Morning, students. In this video, I'll explain short-term capital assets and long-term capital assets, how to determine whether a particular asset is a short-term capital asset or long-term capital asset for the purpose of Income Tax Act 1961. Okay, I have classified the assets into three categories. First one is land and building, financial instruments, and other assets. Don't confuse all immobile property, only land and building, not all immobile property, only land and building. So if the land and building is held for less than 24 months, short-term capital asset, exactly 24 months also short-term capital asset, more than 24 months, then only it is a long-term capital asset. Remember, exactly 24 also short-term capital asset, exactly 24 also short-term capital asset. The important point is this one only. Okay, so exactly 24 months also short-term capital asset, more than 24 months only long-term capital asset. And this is only land and building, not all immobile property, not all immobile property, only land and building, only land and building, not all immobile property. Okay, so total assets I have categorized into three parts: land and building, financial instruments, other assets. Okay, financial instruments, unlisted shares is one thing. Apart from unlisted shares, all other securities. Unlisted shares 24 months or less. Unlisted shares 24 months or less is what? Short-term capital asset. Exactly 24 months is also short-term capital asset. Less than 24 months also short-term capital asset. More than 24 months long-term capital asset. That is for unlisted shares. Listed shares, zero coupon bond, units of UTI, units of equity oriented fund, other listed securities other than units, 12 months or less. All these things 12 months or less. This is equity oriented fund, not all mutual funds. Not all mutual funds, only equity oriented funds. Debt oriented funds will come under the third category, that is 36 months. Okay, mutual funds which are invested purely in debt instruments, for them holding period is 36 months. Okay, so mutual funds which are predominantly invested in equity shares. What do you mean by equity oriented fund? What do you mean by equity oriented fund? At least 60% of the assets under management should be invested in equity shares. That is equity oriented fund. So predominantly equity. It can invest in debt securities, it can invest in alternative investments like gold also, but predominantly it should invest at least 60% in the equity shares. Okay, right. So debt oriented funds comes under the third category. Okay, right. This other listed securities other than units, therefore debt oriented units will cover under the third category. Okay, what is the third category? Immobile property. Because here we have covered only land and building, therefore other immobile property will be there, mobile property will be there, and other financial instruments which are not covered here. Other financial instruments. For all these things, 36 months is the holding period. So more than 36 months. So up to 36 months short-term capital assets. Up to, okay, I'll say up to 36 months. Up to 36 months short-term capital asset. Since I have given the definition of short-term capital asset, up to 36 months or 36 months or less, whatever you say. So it is a short-term capital asset. Okay, right. So while calculating this 24 months or 12 months or 36 months, so how to calculate that 24, 12 months or 36 months? I have divided into two parts. One is inclusion of certain period as a holding period and date from which holding period shall be counted. So certain cases we have to include the period which is not held by the assessee, but someone else is held by the asset. Even that period also we have to include. So these are the cases: assets acquired on partition of HF. Okay, look at this. I'll write here: assets acquired on partition of HF. So first thing, okay, partition of HF. Assets held by the HF. Assets, period during which assets are held by the HF. Period during which assets are held by HF. Assets are held by HF. Assets are held by HF. Period during which assets are held by HF. That is also included here. That also we have to include here. Period during which assets are held by the HF plus period during which assets are held by assessee who received such assets on partition of upon partition of HF. Upon partition of HF. Okay, so person who received such assets upon partition of HF, right? That is the point. So period during which assets are held by the assessee who received such assets upon partition of HF. So this period, this total together is called holding period, total holding period. This is the total holding period. Okay, so total holding period is these two periods. Assets period during which assets are held by the HUF, assets are held by the assessee. As it's told, it is an inclusion. It's not that we are including only this period. So anyway, we'll include the second column. The second column, period during which the assets are held by the assessee. Anyway, will include. There is no confusion about that. This is in addition to that. This is in addition to that. Is equal to total holding period. Is equal to total holding period. Is equal to total holding period. So period during which assets are held by the assessee and period during which assets are held by the HF is equal to total holding period. This will be total holding period. Okay. Similarly, next case is assets acquired by gift or will or inheritance. Okay. Period during which assets are held by donor. Assets are held by donor who is giving a gift. Okay. Plus period during which assets are held by assessee who received such assets as a gift or will or inheritance is equal to total holding period. Is equal to total holding period. Is equal to total holding period. Next, amalgamation or demerger. Period during which shares are held by the shares of amalgamating period during which assessee held the shares of amalgamating company. Okay. Plus period during which assets are held by assessee who received shares of amalgamated company. Period during which assets are held. Period during which shares are held by assessee. Who received shares of amalgamated company as an exchange for the shares of amalgamating company. Period during which assessee held the shares of amalgamating company. Period during which shares are held by the assessee. Period during which shares of amalgamated company are held by the assessee. Okay, so is equal to total holding period. Is equal to total holding period. Okay, next case, demerger. So this is also same, demerger or resulting company. Period during which shares of demerged company are held by assessee. Period during which shares of demerged company are held by assessee. Next, this includes period during which shares of resulting company are held by assessee. Period during which shares of resulting company are held by assessee is equal to total holding period. Is equal to total holding period. Next case, shares acquired upon conversion. Okay, so this is convertible securities. Period during which convertible securities are held by assessee. Period during which convertible securities are held by assessee. Period during which equity shares are held by assessee. Equity shares are held by assessee who received such shares. Assessee who received such shares upon conversion of other instruments, upon conversion of other securities into equity shares. Okay, right. So I'm holding convertible preference shares. The period during which I'm holding the convertible preference shares, that also to be included. And next, period during which shares are held by assessee who received such shares upon conversion. Period during which equity shares are held by assessee. If you are confusing, we can remove this for the sake of simplicity. Period during which equity shares are held by assessee. So includes this is equal to total holding period. Total holding period. Okay, right. Next, conversion of branch of a foreign company into Indian subsidiary of a foreign company. Period during which assets are held by branch of a foreign company. Okay, plus period during which assets are held by assets are held by Indian subsidiary of a foreign company. Indian subsidiary of a foreign company is equal to total holding period. Is equal to total holding period. Okay, is equal to total holding period. Okay, this is what the point. So how to determine the holding period of the assets? So not only the period during which the assets are held by the assessee, but also other period also counted. Okay, right. So this you can make use of before the examination. This you can use for revision. So this screen you can use before the examination. You can use this screen for revision, and this screen you can use while you are preparing. For the purpose of understanding, I have given in detail. So this screen you can use, okay, while you are preparing for the first time, when you are preparing the subject for the first time, for the sake of clarity, you can use this screen. Okay, this is not for the revision, this is the detailed explanation. So this screen talks of, this screen is about detailed explanation. I'll give, okay. So this screen you can make use of when you are preparing the subject for the first time, whereas this screen you can make use of when you are revising the subject before the examination. Okay, right. This is the computing the holding period. Next, date from which holding period shall be counted. Okay, so starting date from which holding period shall be converted. So here also we have to say different types. Okay, conversion of inventory into capital asset, conversion of inventory into capital asset. I'll see this table, I'll give another table for that. From date to date. Okay, conversion of inventory into capital asset. Conversion of inventory into capital asset. Conversion of inventory into capital asset. Okay, in such a case, from what is the from date I have to take? So from date is from date and to date. Okay, from date. So date of transfer, date of conversion, date of conversion of inventory to capital asset, date of conversion of inventory to the capital asset, date of transfer of such capital asset, date of transfer of such a capital asset, date of transfer of such capital asset. So this is the period we can consider for determining the holding period in case of conversion of inventory into capital asset. Okay, right. This is the first thing. Next, second one, shares subscribed on rights issue or shares purchased on bonus issue or split equity shares. Okay, so shares subscribed on rights issue, shares subscribed on rights issue or bonus issue or split equity shares. So in these cases, date of allotment, date of allotment of such shares by the company. Okay, date of transfer of such shares, date of transfer of such shares by the assessee, date of allotment of such shares by the company to the assessee, date of transfer of such shares by the assessee. That is the holding period. Next, renouncing the rights offer. Okay, renouncement of rights offer, renouncement of rights offer. Okay, date on which date of offer given by company, offer given by company, date of renunciation, date of renunciation. Okay, that is the period we have to count. Next, global depositories. This is very important. This is very important. We should understand the flow, how the global depository receipts are converted into shares. So first I'll write global depository receipts. Shares received, shares received upon redemption of global depository receipts. Shares received upon redemption of global depository receipts. Okay, right. So from date, from which date I have to consider? So date of request for redemption of GDRs, redemption of GDRs till date of transfer of shares, date of transfer of shares. Okay, received which are received upon redemption of GDS. Okay, so date of transfer of shares which are received upon redemption of GDS. So first assessee will purchase global depository receipts, or for that matter ADRs, American depository receipts, or IDR, Indian depository receipts, any depository receipts. So after a certain period, assessee will surrender the depository receipts, and in place of that assessee will take the shares. So here we have to consider the date of redemption request till the date of shares. So therefore the transaction flows like this. GDRs are purchased, assessee purchased GDRs So the transaction flows like this. Assessee purchased GDRs, assessee purchased GDRs, assessee requested the depository to issue shares upon redemption of GDRs, to issue shares upon redemption of GDRs. Assessee requested the depository to issue shares upon redemption of GDRs. Okay, after redeeming the GDRs, okay, so assessee received the shares. Assessee received shares. Shares are held for certain period. Shares are held by assessee for certain period. Shares are held by assessee for a certain period. This is how the transaction flows in case of global depository receipts. Next, shares are transferred by assessee. Shares are transferred by assessee. Okay, shares are transferred by assessee. This is the important point. Okay, but what we have purchased is a global depository receipts, and what we have sold is a shares. Purchased global depository receipts. Shares are transferred. So here the holding period is this period. So this is the holding period of shares. This is the holding period of shares. This is the holding period of shares which received upon redemption of the global depository receipts. So first GDRs are purchased, then we raised a request to redeem the GDRs and issue shares in exchange of that, and thereafter assessee received the shares, and those shares are held for a certain period, and ultimately shares are transferred by the assessee. So this is how the transaction flows. Okay, so here I have classified into two categories. First one is inclusion of certain period. Next one is starting date from which holding period will be counted. Okay, so this is the inclusion of certain period, and this is the starting date and ending date. So from which date to which date we have to consider conversion of capital asset and shares of rights issue, bonus issue or sweat equity, and renouncement of rights offer. Renouncement of rights offer and shares received upon redemption of GDRs. So from which date to which date? So at the time of revision, at the time of revision before the exam, it is this slide is this screen is sufficient for you. But when you are preparing the subject for the first time, it should be as clear as possible. Most especially in subject like income tax, which is more complicated. Which is more complicated. When we are preparing the subject for the first time, the subject should be as elaborate as possible, as detailed as possible, so that we'll get crystal clear clarity. Okay, when you are reading for the first time, if you read in a condensed manner, obviously you can't understand the complications in the question. Okay, who is purchasing, what they are purchasing, when they are purchasing, when they are selling. So this kind of nonsenses, in order to ensure that we fully understand those kind of nonsenses, when you are preparing the income tax for the first time, make it as detailed as possible, as elaborate as possible. That is the reason I have given this point. Okay, it may take some time to prepare in this way, but I'm suggesting not to revise this slide for the day before the exam. At least when you are preparing the subject for the first time, we have to make use of this detailed explanation. Okay, right. That's all. In the next lecture, we'll discuss the computation of capital gains and the exemptions, how the exemptions are counted. Okay, right. So for your better understanding, I'm giving the slide. You can take the screenshot of this. You can take the screenshot of this thing. Short-term capital asset, inclusion of certain period and date from which the holding period is counted. Okay, you can make use of this slide for your preparation before the exam. Okay, thank you.